where I welcome all of you in the panel discussion on today's topic, which is Stocks Forever, some ideas for the next 25 years. To moderate this panel today, we are lucky to have with us Mr. Ramesh Damani. Mr. Damani is a member of the Bombay Stock Exchange and is one of the well-known faces of the stockbroking community in India. He has done his bachelor's degree in commerce from Mumbai, and he has a master's in business administration from California State University, Northridge. He is a well-known host of a popular TV show on CNBC TV 18 called RD360, and he is a frequent commentator on financial issues on various business channels. Mr. Damani has been graceful enough to moderate today's session. Please welcome, sir. Thank you. Our next panelist is Mr. Nikhil Vora. Mr. Nikhil Vora is the founder and CEO of Sixth Sense Ventures. He has recently embarked upon his entrepreneurial journey, and prior to this, he was the managing director and head of research at IDFC SSKI Securities, amongst India's largest domestic brokerage houses. He brings with him over 20 years of experience in the capital market space. Mr. Vora has been invited to the Nestle Global Consumer Board and Regional CFO Forum to present potential roadmap for Nestle India, and he has also done the same for Hindustan Unilever, Aditya Birla Group, Marico, Godrej, NIIT, and Navneet. And in the recent Asia Money polls of 2012, Nikhil was voted as the best analyst in India. He also has had the rare distinction of being voted Asia's best analyst by Wall Street Journal. Mr. Vora is a postgraduate in management and a member of the Future Leaders program at the State Business School, University of Oxford. He was also bestowed the Thought Leadership Award by IDFC Limited. Please welcome Mr. Vora. Our next panelist is Mr. Sanjoy Bhattacharya. He is founder partner of Fortuna Capital. Prior to this, he was the head of Indian Public Equity Investing at New Vernon Capital. His earlier stints, in which all of us have seen him, include CIO of HDFC Asset Management Company, head of equity research at UBS Warburg, and 7 years as a credit analyst with ICRA and CRISIL. Mr. Bhattacharya regularly writes for Forbes India, and his penchant for numbers, payoffs, and probabilities is more than evident from the fact that he has participated in the national level bridge championship 6 times, and he is winner of HCL International Bridge Tournament 2012. Please welcome Mr. Bhattacharya. I'd also request Mr. Raamdeo Agrawal to join the panel.
Hello and welcome to Motilal Oswal's Value Investing Congress. You know, this is a cricket crazy land, but if you followed ice hockey, you'd have heard of a player called Wayne Gretzky, who was a prolific scorer. I mean, head and shoulders above his peers, head and shoulders above the record book. And once when asked about his success, he said his dad gave him a very simple piece of advice. He says, don't go where the puck is, go where you think the puck is going. So is the past prologue. 25 years has been great, a very rich harvesting for all of us who are long-term investors in the stock market, as Raamdeo pointed out, with Hero Honda, ITC, Asian Paints, Castrol. But what do the next 25 years hold? Will the past be prologue, or is technology making a lot of these shares very vulnerable to profit dips and businesses going out of churn? We have a great panelist, as you've been introduced, Nikhil Vora, Raamdeo Agrawal, Sanjoy Bhattacharya. Raamdeo, let me start with you. You had a slide in your presentation where you said that opportunities today are even greater than they were 25 years early. Do you genuinely believe that, or do you believe that the best is behind us in terms of opportunities to find 100 baggers?
No, I think actually opportunities are much bigger and times are exponential. I mean, if something was happening at some pace in the past, things are happening much faster because technology itself is enabling things to happen much faster. Like say in 2001, the country didn't have telephone lines. We had only 40 million telephones. In next 5 years, we become the world's largest telephone population, 900 million telephones. And winner takes it all. One company makes from a negative 1,000 crores to 14, 15,000 crores profit. So, you know, those kind of things can happen now only because of the technology-induced consumption which is going to happen in the future. That's one part of it. But I think closer home, last 25 years have been when Indian economy was and the consumption level related was much smaller. We were moving from a $100 billion economy 35, 40 crore people to more like $2 trillion now. But you are starting at $2 trillion now. In next 25 years, you will go to maybe 8, 10, $12 trillion. Everybody thinks that India will be in top 3, 4, at least in terms of aggregate economic size. So I think it is going to be far more exciting. You are starting with a much more stable kind of a forex situation. Country itself is much more prosperous. Discretionary spend is just about starting. And so my sense is that some of the very interesting business models where you have limited competition, lack of innovation in those products, and consumption levels are at pittance right now in India. I think those are the places where one will make a lot of money, and there will be a lot of birth of new companies altogether. Say in media, I mean, we have nothing in media right now for a 120 crore people
Size population.
Size population.
So we'll go from the third world economy to the third largest economy.
Yes.
That itself will create opportunities
Yes.
in
Huge
various
opportunities,
fields
yes.
for you. Sanjoy, I know you're an avid reader, but there was a book that was written 10, 15 years back. It was called Built to Last. These are the great companies that were built to last. I think 90% of them are bankrupt today. So what does that tell you about long-term investing?
Yeah, it's a repeat of what happened with In Search of Excellence, which was 25 years ago. And I think a lot of this is what is called the halo effect. That's another book, Phil Rosenzweig. And he says that the human mind has this tendency to seek patterns where perhaps none exist. And this is exactly the situation. So I don't think that by saying that in Built to Last, he identified a bunch of traits. It's not the traits that lead to greatness. It's most often that you're in the right place at the right time with a bunch of favorable circumstances pushing you towards, absolutely outrageous gains. And I mean, to Raamdeo's point, he's absolutely right. I think what you were driving at as well is true, that as we sort of scale up, the economy becomes larger, there are going to be tremendous. But I think one thing that should also perhaps be put in context is the market today is a whole lot more efficient. Whole lot more efficient. And this idea of making outsized gains, you spoke of 100 baggers, is a function of the duration of competitive advantage. And the duration of competitive advantage across industries, including, interestingly, I'm the only smoker, I think, on this panel. Yeah? So in the US, and you can see it on the streets of Europe, there's a thing called e-cigarettes. And it's a threat. No one would have dreamt of this. So if you want a nicotine kick today, you don't have to buy cigarettes. And so changes will occur and compress your period of competitive advantage. And for those who are really like me, completely obsessed with living in a world of their own, there's this fabulous book which makes an argument why competitive advantage is going to be far more transient. So it's written by this lady called Rita Gunther McGrath of Columbia. She's a tenured professor at Columbia. And she actually talks of how this whole edifice of competitive advantage is under secular threat around the world, across industries.
So the past is not prologue then?
I doubt the past is prologue.
You're a trivia buff, so do you know what is the best stock in the US since 1950?
Since 1950?
Yeah, for 50 years.
It'll be Philip Morris.
Yeah, and that is now under threat because of e-cigarettes, you feel. That's a great call. Where do you stand, sir? What is your view on this? Do you think there are businesses that are built to last, or do you feel that 5, 10 years is a good period for a business to grow?
My first thing is that I feel a complete misfit in this group right now. But there is one school of thought which I guess most of the panel guys are pregnant with, which is the Warren Buffett school of thought. I'm slightly towards the Marilyn Monroe bit.
Marilyn Monroe?
Yeah. So Marilyn
doesn't
said
like
that.
her?
Yeah. So if Marilyn said that if you can't handle me at my worst, you sure as hell don't deserve me at my best. So my sense is, while there is obviously merit in long-term investing, I think it's also important, specifically for investors across, to also time it appropriately right. And I think that's been proven across cycles. So a lot of the names that we looked at earlier, which have given 10-year compound, 25-year compounded returns, the fact is that for better part of the last 10 years, and which is a long term, these stocks have possibly gone nowhere. So I think it's important in that sense to look at investing at the right time also. Second part, which I think is also important, that you can't, when we are trying to prophesize what's going to happen in the next 25 years, you can't necessarily have a great future if you're going to keep looking at yesterday all the time. So my sense is that times have changed. Sanjoy mentioned part of that. I think the time cycle and the horizon required is drastically different. And my gut is that if we are going to remain the investors of the past, we may not be as successful as a lot of other investors have been historically. So
Yeah, Nikhil,
in some sense, it's a mix of Warren Buffett and Marilyn Monroe.
Well, Buffett also agreed with your point of view when you said that if history is the guide to the future, librarians would be the richest people, right? So they're not. So that's good. And let me, Wayne Gretzky, as I told you, was very, very interested in where the puck was going. So that's great. We've had 25 great years of the stock market. Let's see where the puck is going. First, tell me, Nikhil, we'll start with you. How do you decide? I mean, do you look at the ROEs, the business characteristics, or do you look for absolute value? How do you decide the future multi-baggers of tomorrow?
Ironically, well, I've been an analyst for a better part of the last 20 years. Very, very rarely have I actually looked at numbers very, very closely. And that's true. Frankly, I think the fact is that you're betting on certain characteristics of entrepreneurs and sponsors and hope that those really stay the course over a period of time. So, if you had looked at matrices which are like ROE and so on, which are relevant, not ignoring them for a moment, but the fact is that if you look at Fortune 500 list, only 10% of the Fortune 500 have actually survived in the last 50 years. So there's possibly a lot more myth around 25 years or 50 years.
So what is your
years, not
investment
25,
horizon? What is your investment horizon?
So my sense is that there is a trend which is there across life cycle of businesses, and those trends last for possibly at best 5 to 7 years, maybe 10 years if you are really lucky. There are exceptions which are there, and that's true in every case, but exceptions don't make the rule. And I think it would be extremely fallacious to believe that the entire country can buy the exception. So I would much rather go with that 5 to 7 year tenure, which I think is a trend setter. And there are various the fact is, even if you look at the last 20 years or 25 years in India, sectorial behavior has changed every 5 years. So you had consumption businesses which were 34% of index, which were till a couple of years back less than 5%. So textiles used to be 11%, if I remember right. It's 0 or 0.5% right now. Cement used to be very large. It's negligible right now. So I'm not too sure whether trends change. Every 5 years, there seems to be a new market leader which evolves. Today, it's financials, which is 27, 28% of index. But as much as I understand, at 30%, pretty much every sectorial indices gets peaked out. And there is always this substitution
Which is, of course, where the
happens.
NASDAQ, the Apple peaked out as a part of the NASDAQ at 35%.
Because it sounds extremely sexy to say that you should invest in the next Google, or invest in Google rather, not the next Google. Invest in Google and the Facebooks of the world. The fact is, and again, I think there's a lot more intuitive feel on that. That if Google and Facebook got created or Twitter got created in the last 10 years, I can bet on the fact that there'll be 10 more Googles and 10 more Facebooks and 10 more Twitters, which will happen in the next 5. And at significantly lower capital cost than what these guys have gotten.
Okay. Raamdeo, he's putting a heart through your central argument. Challenge him. Make your case as to why there are stocks that can hold for 25 years, 35 years, and why is it rewarding to buy those stocks?
First thing is you don't buy for 25 years. You buy into say 3 to 5 years kind of thing. But you're watching your basket, what's happening to the business. If the business, see how I buy my stocks, and at times you stumble across long-term business opportunities. So I look for first quality of business and management, but I look for growth insights. What is there in the market which beyond that I am getting to see that this particular thing is going to grow at multiple times. Say like in Bharti, when in 2003 or I think 2003, I could see this country doesn't have telephone, and there's a viable option to see this particular product or service exploding big time. And it was available at very, very 23, 24 rupees. So I could see that this business is going to make a lot of money. So at times you become insightful about.
And yet you sold it 10 years later.
Yeah,
Why didn't you hold it till now?
Yeah, so I would have been holding it, but for the management's, what do you call, I would say, not very.
Forays into Africa.
Yeah, into overseas thing. And then what happened here?
So then that proves the point. There aren't businesses to last, right?
No, this
you
is
buy
one
them,
business.
sell them.
This is one business, but I'm also holding for 17 years Hero, which also is going through transition phase of breakup with the Honda. So it's not that I'm holding, say, Glaxo Pharma for a very long time, and I think Glaxo Pharma's future is just about starting. They are buying back at 3,000 rupees. So I have held it for 15 years. I think 15, 20, it's good enough for next 15, 20 years. See, this 25 years, I have been in business for 25 years. How much it changes? Yes, delivery, I mean, if one business which has changed dramatically is broking business. I mean, when we started business, it was 1.5% brokerage, and you could come at 12 o'clock and
Go home by 3.
Yeah, or by 3:30, and
We did.
Yes, and a 21-day settlement and those kind of things. Today, it's a daily settlement, and brokerage is not going beyond 3 or 4.9 paisa, but the size has exploded. But fundamentally, the brokerage is same. So 25 years henceforth, we feel we are the youngest possible company. So 25 years is not a long period in a history of a corporate. And as I was talking about, now I have a chance to give it to the much more capable guys to take care of the next 25 years. So the transition of management in the same, if business is not disrupted, in that case you can have a longevity and much more capable management coming in. And that gives the longevity to the corporations. Today, who knows who owns the Citibank, or who owns McDonald's, or who owns Walmart and all. So I think a lot of businesses will see, particularly consumer-facing business, because consumers fundamentally don't change. They eat the same thing. I'm using the same kind of shirt. I'm using the same kind of shoes. I'm using the same chocolates. I'm using the same breakfast.
So let me get Sanjoy in on this. Sanjoy, Buffett has told us that, Mars chocolate, Coke, the habits don't change. He's pretty sure people will be using it 5 years from now, 20 years from now. So if you get it at an attractive price, why not buy these stocks and sit tight? How do you weigh in on this debate that these two are having?
Absolutely. If you find such an opportunity, I see no reason why you shouldn't. Question is, how many such opportunities do you have?
How many such do you need? May I ask you that?
Yeah.
Very few.
If you get a few of those in life, how do you need more?
Very few. You need very few, but where are they? And the important thing, Ramesh, I'm delighted you mentioned it yourself, is at the right price. I'd like to, say one thing, because I hear it said so often. And I think people just, in our country particularly, they simply don't get it. And so I'd like to make this point early on. What is the value of a company? It's the value of its current steady state business and the future value of growth. Value of its steady state plus excess cash is very easy to calculate. So you look at normalized operating profits divided by the cost of capital. You add to that excess cash. The future value is the value of growth. That is 3 things. The amount of money you are able to invest, Raamdeo's big pond idea, the spread between cost of capital and return on capital, incremental capital, return on incremental, and the third thing is the period of competitive advantage. You got to multiply these 3 things. So if you put in huge sums of money, you can earn a huge spread for long periods of time, which is what you're driving at, then the value of future growth is exceptional. Now, what microeconomics teaches us is if there is such an opportunity, where you can have exceptional spreads for long periods of time, people will whittle away at it. So you should look at growth only when growth creates value through return on incremental capital being superior to what is on offer right now. Otherwise, growth is worthless.
Yeah.
If it's not sustainable.
For my audience, explain that in English language. What you've given me is a geek explanation of this. Explain to me in simple language, what are you saying?
Simple language, don't chase growth.
At
Figure
any
out
price.
what is the opportunity in terms of return on incremental capital that the business is going to put in. Focus not just on capital efficiency, but on how you use the money that companies have available to them to look at the future. to do the Wayne Gretzky bit. Where is the puck going to be, and how are you allocating money to where that puck is going to be? That's the trick.
New discovery itself doesn't make for great stocks.
Not at all.
Why not? Which are the companies that were new and have faded? Just give me an
Thousands.
example.
I mean,
Airlines.
Airlines actually are old because Wilbur Wright and Orville Wright came around in 1908, and as Buffett himself says, everybody but the airlines got rich. Users of airlines did well, everyone did well except the airlines. But I think if you look at businesses that have had a torrid time in recent years, for instance, the paper industry worldwide. And I'm talking of world-class companies. I'm talking of Georgia Pacific. I'm talking of really international paper. They're struggling.
I get to that. But one of the things Buffett teaches us, and that's to me the most instrumental, great companies have pricing power. Right? Explain that to me and give me an example of something that you've bought that has had pricing power or a business that you think has pricing power in the future.
Well, I don't think I've bought anything which has pricing power that I can point to. I really don't think so. And this is another thing which is very, very elusive. There are very few people who have the ability to increase prices when their costs increase, operating costs increase, and the consumer continues to buy those products or services without cutting down on the quantum of the purchase. That's really what pricing power is
For my
about.
audience, tell me the classic example. I know you know the
Cigarettes.
name. Huh?
Cigarettes,
would be
booze.
one. How about Disney?
Disney has
Had enormous pricing power.
It has had enormous pricing power, but there have been missteps. When they went to Hong Kong and they set up Disney in Asia, it didn't work because the way the Asian franchise works is very different to how Americans look at it or Paris looks at it. Where they've set up outside of America, these are the two largest
But
investments.
still, it's been a great stock because of the pricing
It's been
power.
a great stock. Yeah.
Raamdeo, pricing power. ITC is obviously your classic example of pricing power. Where do you see in the next 20 years or the next 5 years businesses that have pricing power?
Yeah, so the consumer monopolies, they are typically places where you get the pricing power. Wherever there is a massive growth or demand is large, but competitive forces are monopoly, that is the best, like in ITC, but duopoly or triopoly, say like Asian Paints. I mean, it's a 60-62% kind of market share. The other competition is just about, the next competition maybe 10-15%. So clearly, they're the price leader. I mean, they will demonstrate the price and everybody else will take it. And what they demonstrate is clearly after the cost absorption. One of the funny things I have seen is if you see 15-year track record of most of these company franchises, whether it is Nestle, whether it is Lever, whether it is Asian Paints and all, they not only make same amount of money from the sales, volume growth, but even the value growth which you do, the inflation which they pass on inflation with a markup. And that's if you can pass on the inflation with a full markup, I think that's the pricing power.
Yeah, so let me get this straight. You basically, to find out pricing power, you need to look at companies that are monopolies, oligopolies, duopolies, because they would tend to have pricing power.
Yeah, because the customer doesn't have any choice but to go there.
Correct.
Can I add to that?
Yeah, sure.
Because I don't think we've dealt with pricing power in a framework that is complete. What is Bloomberg?
That's a monopoly information provider.
No chance. It has 4 other competitors.
Nobody close that.
Absolutely. 10 years ago, when Michael Bloomberg left to become mayor of New York, there are enough guys. They're Knight Ridder, they're Dow Jones. Pricing power comes actually from a number of other things. We only tend to look at the franchise. Pricing power comes from technology, Intel. Intel had huge pricing power for years together. When you have proprietary technology, you have pricing power.
And almost an oligopoly.
Till AMD came around.
It's almost a monopoly. I mean, AMD is...
But how did it, when Intel was set up?
Ironically, Intel's lost 80% of its
That's
market cap.
recently, but technology, proprietary technology creates pricing power. There's no doubt.
Nikhil, let me get you in. The internet, we often hear the saying, it's a winner-take-all economy. And a winner will have pricing power, right? So do you sense opportunities, say, in net stocks, in the new economy that we're building?
So my sense is that, frankly, if we are looking at wealth creation as the end theme, the start theme is going to be very different as it used to be till yesterday or till today. Till today, it was about capitalism, entrepreneurs and capitalism, which effectively is the profits that they make and thereby the value that we ascribe to it. My sense is that future, it will be more about how entrepreneurs can create inclusive growth, and inclusive from a very different perspective, which is trying to create businesses or technologies which are which are very disruptive, and disruptive in a lot of domains. We just talked about cigarettes in one case, but today hundreds of billions of dollars are spent globally by everyone to reach the consumer. And I think that's complete fraud, which is advertising, marketing, above the line, below the line, and so on. And ironically, the guys who spend this money don't even know who's your consumer. So my sense is that as you move forward, internet will be a big trigger point for identifying the consumers, for doing a lot of consumer analytics, which actually talk about which consumer looks at your brand, why it doesn't look at it, and why he should be or shouldn't be your consumer, and so on. So I think the cost of reaching the consumer will actually dip significantly, and thereby you need to look at businesses which will actually emanate from that market. So that's one point that I wanted to make. Second is, looking at past leaders, I'm just extremely skeptical, and I'm at heart a consumer analyst, so I've traditionally been a long-term way of looking at businesses. But I think the fact is that JCPenney got killed in the same era when Walmart became the largest company in the world. That's true. If you look closer home, the fact is that entrepreneurs who created extremely sexy businesses, Educom, Shantanu, Agrawal doing TV18 or TV18 Group, sorry for this, but Jignesh in FT and the group, Tulsi Tanti in Switzerland, Kishorji in Pantaloon. I think extremely sexy businesses, great opportunity, growth pretty much evident, competitive intensity zero in practically all these businesses, and yet the fact is that these guys have fundamentally destroyed value.
But the balance sheet, I mean, that is the analyst's job. The balance sheet clearly, signaled a problem. The market may have done any serious analyst would have figured out most of these things, that these are not businesses built to last. And if you didn't, I would respectfully say you're not doing your job.
In fact, the irony of businesses built to last is only in retrospect.
Not really.
So,
I had enough people who were bearish on the companies that you mentioned, no matter what the price. I mean, the businesses didn't look viable.
Actually, I think what Nikhil is saying is very interesting, because he's driving at something that, again, doesn't get much attention in India. To build these businesses, you need management which has a bunch of qualities, which looks at the future in a way that is different from their competitors. So does Amazon have pricing power? Yes or no?
Amazon have pricing power?
I'm asking you. Does it have pricing power?
No, they actually destroy pricing power.
And yet they've created incredible wealth.
They've created stock market wealth. They've not created cash flows yet.
Yeah.
Ramesh, let's not get pedantic here. If you had owned Amazon stock, you
You've done
wouldn't be here
brilliantly.
today.
You've done brilliantly.
You wouldn't have been here. I can assure you this.
I'd be in the south
Let
of
me be
France.
very blunt.
But fair enough. I grant you that. But
the
they've not
issue
created
is-
cash flows.
The issue is, when you look at a business, you've got to understand what are the central dynamics of that business, have clarity of purpose, and a certain sense of integrity, which is vastly missing in a number of people in India who are setting up businesses. It's not about the sexiness of the business. How does it matter? If you're robbing your investors blind, you're not going to create wealth. Too many modern day analysts have got into what I love, this new phrase, business model. It's such a wonderful phrase. It leads you to your doom, like lemmings walking into the sea. If you own 100% of a business, how is it different from owning 1% of the business? What would you be worried about if you own 100% of the business? Wouldn't you be worried about the character of the guy who owned the business?
Absolutely.
So what's the difference now?
So that's the point I was making for him also. I said, if these businesses went bust and you didn't figure it out, you didn't do your job as an analyst. That's my view. Raamdeo, let me just come back to you, because, the interest always is to look ahead into the future. So how would you play this? You've given us 20 stocks that you felt have compounded over superior rates. Would you place bets in those same 25 for the next 25? Would you look differently? Share with us your methodology.
Yeah, so clearly, those are the stocks I will definitely consider. Go and try to understand whether I understand any one of them. And I would think if I don't have any taboo about investing in cigarettes, I think the next ITC, maybe not 35% compounded, because those were the time and maybe the prices were depressed at that point of time. For some reason, excise case and all those things were on in late 80s. So clearly it was depressed. But even if it was not depressed, maybe instead of 111 crores, it would have been 250 crores or 500 crores. Doesn't matter.
You still made out.
Yeah,
But let me ask you something. There's a very Indian famous movie called Diwar. I don't know if you've seen that.
Yeah.
There's a dialogue when Amitabh Bachchan and Parveen Bavi are sitting there, and Parveen looks at Amitabh and says, देखो आज ये शराब पी रहा है क्योंकि ये खुश है, ये पी रहा है क्योंकि आज दुखी है, ये पी रहा है क्योंकि दोस्तों के साथ है, ये पी रहा है कि दोस्तों के साथ नहीं है. Does alcohol mean one of those great businesses that you can hold almost forever?
I would think so. I mean, now you have the perfect market, very large size market. A very, I would say the franchise was not optimally managed, and now you have got the best manager from
Globally.
globally.
We are referring to, of course, United Spirits, which
Yeah.
all of us own,
Yeah.
and owned by
So
Diageo.
I think this could, I mean, if smoking, I mean, if Sanjoy doesn't stop smoking, keeps smoking the same old cigarette, in that case, I think there will be a good competition between this and that in next 10, 15 years. So it's very important. I mean, these kind of, how can you change drinking? Can you, I mean, yes, telephone can come and go, maybe it can become wireless, it can become internet-based or whatever. But drinking remains same. I think you are not going to drink digitally in next 25 years.
I don't think so, are we?
So,
So actually, you know, Ramesh, is very interesting. The thing is, if it is habit forming, you have pricing power. So same thing with Bloomberg.
So-
There, the fancy word for it is network effect. So the trader who sends mail on the Bloomberg mail system to get a response from someone else and who's chatting, he's not even doing a trade. He will make his employer pay up to have Bloomberg. Because it's habit forming for him. All his friends are clustered on that goddamn Bloomberg.
Nikhil, alcoholic beverages. I mean, those are businesses that will last next 10, 20, 25 years, won't they?
Oh, they would. So clearly, there are businesses where there are opportunities. The fact is that globally, liquor businesses are more valuable than cigarette businesses are. It's at a function of some 3x or something. In India, it's at some 20% or something like that. So it's quite ridiculous the way it is. It's insane to also believe that United Spirits in its earlier avatar or its avatar till date was making or struggling to make all of $75 million as profit. When you control 60% of Indian liquor business and you make $65, $75 million profit, obviously something's not necessarily right.
They gave me a profit warning once. I used to
Yeah.
own the stock, saying bottle prices have gone up. That's why we didn't make money. I mean, in liquor business, you know. So see, that's the point of corporate management. So, but now that has come in, right?
Yeah, so I think there are a few businesses which one should really look at. And, so for instance, liquor, the largest company in the world is at $100 billion market cap. The largest company in India, which is also the largest in the world in terms of volume, is struggling to be at the market cap which it is right now, after being up some 5-6 times in the last couple of years. And look at media, and that's something which you obviously are very close to. The fact is that while content business in India is extremely cyclical and non-secular, because it's creative by its own nature, it cannot be secular. But the fact is that infrastructure business in media, which is distribution, is extremely secular globally. Comcast is the world's, is it Comcast?
Yeah, Comcast.
Yep.
Yeah.
World's largest media company at $100 billion market cap. In India, distribution assets cumulative are struggling at $3 billion market cap. So I think there's a long, long way to go in some of the assets that one's looking at.
But Nikhil, just earlier in the answer you mentioned that actually advertising is on the decline and you would go on the net. So you're not basically bullish, I assume, on TV content business, right?
Not so much on content, and also one more reason where, when we talk about longevity and stuff, the theory on media, which I just talked about, looks very sexy right now. Large India, large pop, not doing too much. We pay $200 and stuff like that. But the fact is that trends are changing globally already. So if today US watches 50% of US watches time-shifted television today, I think that's the danger for distribution assets at some stage. Maybe not today, not in the next 5 years, but someday, unless they are abreast of the changes and simultaneously make changes in their business models. Because if people watch time shifted, they're watching it on their mobile, iPads, whatever, recorded.
But they still want to
distribution
watch
income.
news, they still want to watch cricket, they still want to watch Bollywood. So content has to drive this business.
They will possibly pay $1 per month against paying $30 per month right now.
You really think Shah Rukh Khan will sell himself so cheaply? He won't demand his pound of flesh because people want to watch him?
The fact is that Tips loses all the money right now. They still pay Shah Rukh the money required for buying music rights. Tips doesn't make money. So I think the fact is that certain businesses happen because that's the way people fantasize them to be. A Shah Rukh and an Amir will take what they require, and there will be players who will be willing to pay them. but it's tough. I'm just saying that in generically, I think it's going to be tough to monetize this business perennially.
I disagree with that, but Sanjoy, let me get your view on that. I mean, do you believe that over content and distribution, say, in the media business, where would you bet?
Given how clueless I am, it'll be like the toss of a coin.
50-50?
Like the famous biscuit brand.
You know,
They don't go out of
even in-
fashion.
even
Biscuits stay in fashion.
Yeah, even in distribution, I mean, for example, Nikhil, even in distribution, you know, Cisco, for example, used to make all these hardware routers, okay? And now they're facing threat from software routers that are coming on business. So
Correct.
hardware itself is no panic here. You might, you know, go through fiber optics, satellite, I don't know where it'll go
Correct.
through. So, but I personally believe that, you know, content is news is news, and you'll go to a trusted source for news, whether it's BBC or whether it's Star or whichever.
No, I think that's right, Ramesh. I don't have a
Yeah,
difference with
so-
the ad. I think what he's saying is the way in which that news is made available determines how much you'll be willing to pay for it. It's not that people won't want news. It is how, see, at a much more crude level, because my thinking is also always much more crude. You look at what happened to newspapers. The great Warren Buffett, the world's biggest owner of newspapers, he's just been crucified, fried alive.
He doesn't feel that way. He's still buying some local dailies. I mean, he doesn't feel
Ramesh,
that
the
way.
fact of the matter is, Washington Post is a perfect demonstration. We may all be in denial because we worship, we are Hindus. We worship gods. The fact is, Mr. Buffett has been fried in mustard oil because I'm Bengali. He's been fried alive. And we don't want to accept it. But that's the truth, because this is exactly the point he's making. That the real issue is, what does the user want and how, what is his pattern of usage? And the area that you're talking about, content versus distribution, really goes to the heart of that. So you have to create content. Distribution doesn't work without content.
And unless you have a 360-degree view, it won't work.
It won't
You got to
work.
be on mobile, you got to be on the net, you
Correct.
got to be on
So-
the paper, you got to be on television.
So technology is really creating the need to have multiple ways to integrate content and then offer the customer the solution that works best for him.
Right.
And if you live, blissfully unaware of that, even a guy like Murdoch is actually finding life damn tough.
And he split his companies up.
Correct.
into
He's broken them up.
Newspaper and electronic businesses.
That's right.
Yeah. There's something that I'm battling with, so I'm going to put it out to you. Maybe you haven't thought about it, but if you have, I want the three of your opinion on that. You look for businesses with pricing power. You look for businesses that are duopolies or, oligopolies, so to say. I used to find, say, credit cards, MasterCard, Visa, two great duopolies, stocks done brilliantly after they got listed. Then I went to America and I got very enthused by the data storage business. Again, two companies, Western Digital, Seagate. Again, stocks are done brilliantly, despite PC sales declining.
Correct.
I now come up to this internet age, and I realize the ultimate winners, like in the gold rush, it's the guy who supplies the pick and the axe. The ultimate winners in this are the logistics guys.
Correct.
These are the guys who will have to deliver in a real world. And as it so happens in the US, there are two national players, UPS and FedEx. How do you place these? I mean, would you look ahead, speculate for me? Over the next 25 years, how will these businesses do?
I would say
Sanjoy.
I'm in your camp. On the logistics businesses, as this, in fact, anyone who's owned Blue Dart is already singing to the bank. And it hasn't got all this, fancy footwork that you associate with a lot of people, because actually, that's an example of pricing power.
They should have pricing
They
power.
do have pricing power.
Well-
You can go to other courier companies, you can pay much less, but you still go to Blue Dart for a bunch of reasons. You want, the guaranteed delivery within a certain time. So it's the premise that we offer you this set of, traits. And if you want to pay for that, we'll do it for you, and no one else does it better. That's the value proposition. And increasingly, for all the reasons that you mentioned, going forward, guys who are exceedingly good on the logistics end of these businesses will do very well. The only question is, the two things here. Capital allocation is a huge challenge.
Yeah.
It's a big, big, big challenge. And you can go hopelessly wrong on this one. Because to ensure this next day delivery to, drones, Amazon, capital allocation. This is a big decision. The same thing, buy aircraft. And the second thing which is very important, which you got to figure out is, which are the killer categories? Because if you go into a category that is not going to have the kind of growth that you want, and you dedicate a substantial part of your effort and resources there, then you'll lose out. But in the idea, intellectually what you're saying, I have no difference with that.
Raamdeo, any thoughts on logistics as a sector for the next 10, 20 years?
Clearly, I mean, packets are going to fly from one part of the country to other part of the country, from India to abroad, abroad to India. So clearly, number of parcels which are going to move through one or two agencies is very, very large, and it requires a specialized service. And already the world has seen consolidation. So now India cannot produce, I mean, it can attempt, but coming up to the size of FedEx or UPS from India is going to be tough. But I think there are hundreds and thousands of logistic companies in India. So clearly Blue Dart is one winner you have, but I think you are going to see some emergence of one or two tigers from Indian side who are going to kind of adapt to the new environment, and probably that could be a super multi-bagger kind of situation.
Right. Nikhil, you got any thoughts on this?
Oh, pretty much agree, I guess. I guess in most cases, when it's difficult to identify the core winner, it's good to identify the ancillary winners. And in this case, clearly, it might be slightly challenging to identify who's going to win in the e-commerce race and how large it is going to become. Everyone understands that it's going to become large. Tough to identify the winner because there is, like always in India, overcrowding which happens in the very near term. Opportunities are huge, but overcrowding in the near term, which destroys the economics of the business. I think ancillaries make a lot more sense, so pretty much aligned to that.
Okay. Yeah. Nikhil, I'll start again with you now on another round of the question. We talked about great stocks, characteristics of great stocks, great businesses. But in order to make great money, you need to be a great investor also. You need to have the ability to sit tight, ability to think through, go through volatile periods. In your opinion, what are the characteristics that an investor needs to be a mini Buffett? You know, I'm not saying Buffett, that's the one, and that's the Don Bradman of the world. But someone who can, individually, what characteristics are needed?
The Cheteshwar Pujaras. The Cheteshwar Pujaras. You're hunting for the
Rahul
Cheteshwar.
Dravids.
Yeah, that level.
Yeah.
We have one in our midst. In fact, two in our midst, as I can see. And some in the audience as well.
Yeah.
So we're not short of those.
No, so, I think it's always challenging in that count. But, while I named some of the guys earlier and said that they've destroyed value, which included the Shantanus and Kishorjis and Raghav and so on, the fact is that they also did create obscene value for a better part of the last 7 to 10 years that they operated in. So I think, and it's not necessary that everyone had a reason for failure. There were different reasons why they possibly couldn't capitalize on the success that they had. So as long as we identify, I think it's important to identify virginity in certain spaces. And if you can have capability to take risk. And I think that's the beautiful part of India, that every third guy in India is an entrepreneur in its own making.
Correct.
Everyone's got an idea. They think they'll make it a success. And a lot of people do. They reach certain stages. And there is wealth to be made at all those stages. There is wealth in early stage investing. There is obviously supernormal wealth in early stage investing, which is what's been proven globally. So the last 10 years, the most successful companies in the world which have created wealth are not companies which have been there historically. Philip Morris has done brilliantly for 50 years. They've not done exceptionally brilliant in the last 10. So, one needs to park where we are looking at. So there is a lot of money in early stage with the right guys. An entrepreneur obviously is the key to this entire journey that one looks at, because business models will change. I said I don't believe too much in Excel despite being an analyst for 20 years. Generally, I haven't myself ever seen what I predict year 3 going to happen in year 3, very rarely. Maybe I'm not so good as an analyst, but I haven't seen that happen ever. So I think it's important that guys are able to predict the future course of business and change trends accordingly. As long as one finds those attributes, and I'm sure as businesses expand, there'll be a lot of vacuums, and some guys will take opportunity in that. Somewhere there was also this conversation that a lot of wealth creators happened at the bottom of the pyramid. Again, my gut is that if I had to look at 10 years forward and look at wealth creators coming in, I think there'll be precisely 0 guys in that wealth creator who would have been playing the bottom of the pyramid. I think the reason why these guys still made it at the top in terms of cumulative returns is because they, in the last 5 to 10 years, actually moved their business away from the bottom to the top of the pyramid. So levers of the world realized that the market was saying, sell me more Lux and Dove, and no longer the lifebuoys of the world. And that's the reason why market caps really went up. ITC, when we talk about ITC, we talk about pricing power. We very rarely talk about more consumers getting added. ITC has grown at 2% compounded for last 10 years, volume. This is a pittance. They've grown on pricing power. So I think everyone that one would look at is moved up the chain, and that's the reason why they are there. So if I have to look at trends, maybe one is inclusiveness. So maybe video could become the next big thing. And today we look at Facebook, and people are chatting up on that and so on. If millions of people could connect to millions of people on video, I think that could become a rage.
It's called Skype?
Better form of Skype. Maybe if you do multicast, you could do 30 to 30 or whatever, 50 to 50.
Which is owned by Microsoft. Great. Raamdeo, let me get to you. Raamdeo and I met over this weekend, and he gave me, I think, one of the great quotes that I've heard in recent times. He said, amateurs book profits, professional book losses. Raamdeo, please explain it to our distinguished audience.
So this was the point which I was trying to buy right, sit right. So when you are sitting for 15 years, and if you are booking profit every time the stock goes from, you bought at 500, it goes to 700, and you book your profits. Because I keep getting this question, when will you sell? So if you keep selling your profit machines, obviously the losses you don't sell. You just keep sitting with that. And
Hoping
that's why,
that you'll make back your money.
Yeah,
in that.
that's why when I meet my clients, most of them, they have only bad stocks. Tons of them. I said, where are those good ones which we recommended? They said, we have booked the profit and gone. So, what I've seen is generally clients, they book the profits, and the job for us left is to book the losses for them. So, typically...
Or you book your own bad companies out.
Yeah, so when I manage portfolio, I'm much more focused on where the losses are being made or potential losses are there. So I cut my losses, and clearly we reallocate the same money. I mean, recently in FT or earlier in DLF or everywhere. I think in 10 years, at least 1/3 or half the selling is purely because we are making losses. Or other half is because the corporate managements have changed their plans or things like that. But we don't hesitate to book the losses and move on to allocate to the profit-making machines. And I don't bother too much about booking profits, whereas the clients are clearly focused on making
profits. It's a great lesson to learn, and I learned something from Raamdeo that day. But Raamdeo, let me ask you this question in a different way. The one thing I've noticed about you is that market cap doesn't scare you. If it's 20,000 crores, 40,000 crores, it doesn't scare you.
Yeah.
Someone like me looks, it's already gone up 20x, it's now 20, like United Spirits, it's 25,000 crores. But that doesn't scare you.
Yeah.
How do you build that discipline of taking market cap as a relative value rather than as an absolute staggering figure? So explain that discipline to me.
Yeah, so one of the things is the size of the economy, in the sense that if you look at the economy worldwide, and Indian economy is growing by every second. Like if it is 100 lakh now, after a week it will be 101 lakh. So, so it's growing continuously. So relative size of the enterprise has to be in relation to, I mean, you cannot have Microsoft in India. You can only have in America, or you can have in global economy. So once you see the size of the enterprise, you got to have sense of proportions for every business. What it can be. Like Diageo can be a ITC. I mean, Diageo kind of company can scale up to 2,50,000 crores or 3 lakh crores. Or a TechM can think of chasing Infosys performance or TCS performance. If TCS is 5 lakh crores, TechM is at 40,000 crores, I have a chance to see some race happening. But I mean, just because it is 40,000 crores, I should not be scared. Because it's a global economy, it's a $70 trillion global economy. If $3 trillion is the tech spend, somebody is going to make some serious money out of that. If the company is worth, it does $100 billion of turnover and it makes a 10% profit, $10 billion. If 40,000 crores can be a profit, then the multiple of that has to be much bigger, and then growth on top of it. So,
and the best example, of course, is you and the rest of the panel know that Buffett bought Coke 100 years after listing. It was a $10 billion company or something, and he said, you wonder what moves the needle.
Yeah, I think one of the best pitches I have seen ever about any stock is the pitch of Charlie Munger on Coke. I think he has talked about some $2 trillion potential kind of...
yes, he did.
In
one of the lectures at USC or something, he goes back, as he called Jacobs, reverts.
Yeah.
He says, what can be possibly... It's a great thing, and if you haven't read it, look up Charlie Munger's Coke, you'll find it. Sanjoy, Sanjoy at this point is always, very hard to get an answer from because he'll always say, I was dumb, I was lucky, but he's picked a great number of 100 baggers in his
But
life.
no, 1,000 beggars. So many 1,000 beggars.
1,000 baggers too.
But it's true.
So let me get back to the question that I started Nikhil with. That what is the temperament that helps an investor, in your humble opinion? The temperament. I want to know if these guys want to know one or two things that would help them. What is the temperament? If they would ask me, I would say, look at it as buying a part of a business. You know, suddenly everything opens up. Give me some of, because you've been so successful, give me some of the
Lucky.
things. No, let's
Again,
not get into that debate.
yeah.
But suggest to us.
I think it's a large part of it. You know, all the guys who read Buffett, I don't know how they miss this. It's about temperament. It's not about, it's about having humility. That's the great thing about Buffett. It hits you in the face. That he's so willing to accept his mistakes and so publicly. His annual report is actually a wonderful illustration of his humility. And that is, I suspect, read more than a lot of people except you. But one thing that you find that links all the great investors is humility. He has it in spades. He didn't mention it, but he has it in
I know he
spades. And
Every time I walk into this building, I get, wow, it's been created by two of them, Motilalji and
correct, and they
Raamdeo.
both have it in spades. The second thing which I think is very important to make big money is to have the ability to stand alone.
That's the one.
It doesn't matter what other people think. If you do your homework, you have figured it out, you understand what it's about, and you have the conviction that, yes, this is going to work, that's fine. The third, which I think unsettles a lot of people, and this is where I actually do quite well because it's so dumb, patience. Just sit there and wait. There's so many other things to do in life but worry about the stock market. Just sit and relax. Enjoy yourself. Have a good time. As he said, this is a variation on his theme, the book losses, book profits idea. You only got to be active in seeking out your mistakes, have the humility to recognize them, deal with them promptly, because accepting a mistake is a loss of face
It's so
within
much
yourself.
harder. So much harder.
Correct, because you're an idiot. The fact that you make that mistake tells you what a bloody jackass you are.
And
So
by
you got to
selling
act
it,
on
you
it.
almost prove that.
Correct, it's proven. It happens to me all the time. And I think the last thing, and again, this is famous and this is Buffett, knowing who you are and knowing your limitations and living within the boundaries that define what you are. You don't have to be someone else to make money. But if you can be honest with yourself and accept who you are, and within that, this whole thing of circle of competence, all these ideas are rooted in this thing. Be honest to yourself. And there's this famous saying, again, I'm surprised you didn't use it, but investors are their own worst enemies. So if you can understand yourself, and it takes years, I think I still haven't figured it out. I figured him out better than I figured myself out. And I wish I could be more like him. But if you begin to know yourself and are happy to live within your skin, then I think you've increased your chances of doing well exponentially. Because this is a funny game. A, you're not competing with others. You're competing with yourself. You have to do what makes sense to you. There's no competition here.
Envy is a poor virtue.
Correct. It's one of the worst. It's one of the most deadly sins, actually. So one is you're not competing with others. And the second thing is that there's always something to add to your existing armory and to build on what you have and then be able to take advantage of that. It's that simple. In fact, and the last thing I'll say, which actually it's a paradox, don't ever aim to find the multi-baggers. Just keep it really simple. You will be blessed. The hand of God will be on your head if you try to earn 15% a year total return. You'll be surprised how many stocks compound at 35% then. But keep it really simple. If you can't figure something out, stay away from it. The maths doesn't make the money. The models don't make the money. The common sense makes the money.
So how do you answer the question that the audience may have is That's great, Sanjoy. I understand all this. But
you've transcended this, Ramesh.
I'm just being the panelist, so let me be that. A lot of people will ask this question that, look what happened in the last 25 years. We had general elections, markets been down 10%, Kargil happened, plagues have happened. You know, every day there's some bad news bears in the news. So how does an investor psych himself to sit through this?
First of all, it goes back to what I said. People are hyperactive. Just because you have so much information and there's so much noise, you don't have to listen to it. Sort the wheat from the chaff. I mean, you know, if I asked 1,000 people today, you got to focus on, Buffett had this 2x2 matrix, knowable, not knowable, important, not important. Focus on what is very important and what is knowable. So most of us, we don't know what a PE multiple is, I think. Yet we use it all the time, day in and day out. And I bet not 1 out of 100 professional investors have taken the trouble to read a fantastic article by Michael Mauboussin on what a PE multiple is, considering we use it so frequently. Why not? Why are you so busy about figuring out what Narendra Modi is going to do? Does it matter? I mean, it really doesn't matter. It really doesn't matter.
Okay.
And there's evidence for this, but we live in denial. Because India has had multiple political episodes of uncertainty, and we've survived it. If all this hoopla about our country growing at a great rate, our being very entrepreneurial, the fact that, people are going to take advantage of these opportunities to create scalable business is all true, the worst that can happen is that government will get in the way of your making money, right? That's the worst that can happen. Government has done that for years. And India has still succeeded as a nation. So why are we so obsessed?
Right.
And fundamentally, it's not knowable. We got to focus on what is knowable and what is important.
Exactly, fair enough. And the point you make can be summarized best by Raamdeo's first slide, where he said the Sensex was at 600, it's now 20,000.
Correct.
You do nothing else, you make 30 times your money just by betting on the index stock. Because, the Dow or the Sensex, the story of that is written by optimists. Fair enough? Great. Raamdeo, let me just start this last round with you before we'll open it up to questions if there are any. We've said this in dribs and drabs, but they want some takeaways, okay? The next 25 years, give me some themes, some sectors, some ideas, some stocks.
Yeah.
Just start the ball rolling.
Yeah. So one of the ways I think, and I've been benefited by a book called Value Migration by Adrian Slovatsky.
By who?
Adrian Slotsky.
Okay.
It's not a very well-known author, but been very helpful in making money. So what is happening is the values in businesses don't stay at one place. So it moves from wired phone to wireless phone, from public sector bank to private sector bank, from Doordarshan to Z television. So this pattern keeps happening, and internet will facilitate it even more. So we have to feel that the first quote you said, where the puck is going to be. So the value migration is the way to figure out. I mean, like Indian tech, it has an absolute advantage. I don't remember any business of what little I've read. Please educate me if there is any one where absolute advantage for any business of the size of digital economy, where in India you can get an engineering graduate for $6,000. In fact, that is also higher side. In Boston, you cannot get it for even $60,000. The same kind of guy with the same attitude who wants to work in weekend also. So with this kind of absolute advantage and digital economy growing at 4-5% every year in $70 trillion global economy, where can you find this kind of things? And innovation is actually friend of, I mean, it's a very big statement to make, but innovation is friend of Indian tech, the way it is standing today.
Correct.
Innovation is happening in San Francisco or Bay Area or wherever.
The work is being done here.
Yeah, but we will facilitate you innovate more at cheaper cost. So we are always relevant. So in that situation, I see huge opportunity in value migrating from America to India in digital economy.
Great.
And you have to find those machines. So I have to see where exactly values are migrating in business after business, and at times you come across that pattern. Like one of the things I was looking was even radios. I mean, from Akashvani, we have moved to the FM radios. But do you know that in India, only 10% of the population of 120 crores, in fact, less than 10%, I think 8-9% only get FM radio. Private FM radio is available only to 10% of the population. It is the cheapest mass media you can ever have. I don't know why licenses are not being given and not being allowed. So this business can scale up. It's a consumer-facing business. In entertainment, that could be one. You can see one or two companies emerging over there. Then financial services, like 70% of Indian banking is still public sector conventional banking, which are, I mean, by various studies it is proven that they are very inefficient compared to their tech-savvy private sector banks. Banking, it is 200 old years, 200 or maybe very old business. So it doesn't change. With the technology, you only change the delivery mechanisms. But concept of basically borrowing in CASA at about 2-3%, 4% and lending at 10-12%, that goes on. So I think you are going to see some huge emergence of banks from the new licenses and from the old successful ones. So that financial services remains a very large portion of wealth creating. Even in mortgages, I mean, we have wonderful mortgage companies here. Yeah. In India, still have kind of housing shortage of very large magnitude, and balance sheets are unlevered. We are talking about 5, 7%, 8% growth in the economy with a rising savings ratio from 30% to 40, 50%. So I think those are the
great. You've left us great ideas. You said technology. You said alcohols. We talked about that. Yeah. You talked about radio, FM, financial services. Yeah. Great. Nikhil, let me come to you. Give us your thoughts. Where would you place your bets?
So my gut is that, again, till date we've been looking at India, looking at rural and urban. I think all that is over, pretty much. So if I have to take the next 5 years, India, the way we are looking at it, will be extremely global, which means that the entry and exit points for Indian companies versus global companies is pretty much seamless. So one is, the way people reach consumers. That's clearly so consumption-centric, but not consumer products. Consumption-centric businesses. Second is to look at.
For example.
So if I have to look at ways people are reaching consumers. So if consumer analytics is the next become the next big thing. Could be some of the e-commerce platforms, but obviously you've got to be fairly selective in the way it's going to evolve and so on. Second would be health and wellness. If I feel that a lot of these guys who've created value have created because they migrated at the top of the pyramid, which means that there is a wealth effect which maybe not so evident today, but I'm sure it's there across the system. So by default, preventive health or even health wellness as a category should become extremely large and vibrant. Third is mobile as a platform and thereby the multiple usages of mobile. So you talked about credit cards. I think maybe there could be an optional trade to credit cards which could evolve through mobile as a platform again.
Payment through mobile.
Yeah.
Foursquare.
Yeah, so you've already started to see a lot of those happen in the private domain right now. And then look at, maybe if one has to look at the old age businesses, theoretically. I would look at businesses which have scaled disproportionate sizes globally and yet are extremely small and irrelevant today. Doesn't matter what their profits are. Frankly, you make a lot more money in non-profitable businesses at times. So I think liquor could be one big area to look at. I'm not too sure whether retail will be one big area. I think by the time we capture the retail revolution, I think the way consumers look at retail might actually change. So
let me ask you this question, Nikhil. If you could invest into Bitcoin, would you do that? Because you talk about this digital economy a lot.
I don't know right now, frankly, but let me just put it closer home. If I had to invest in one stock or a couple of stocks, maybe, and I have not yet invested, and I may not invest also, but I think InfoEdge could be one brilliant business. Purely
Good
from
collection of net businesses.
No, I think the best part about InfoEdge is a company, and that's the model to look at. InfoEdge is just the name right now, but it could be anyone. Someone who's just dismantling the entire intermediary business. So be it in insurance, killing literally all the insurance guys in the system, just as travel ticketing happened. So if you look at what they've done in insurance business, which is Policy Bazaar, what they're doing in matrimonial, what they're doing in jobs and so on. So I think anyone who's present in killing the entire intermediary business, I think is very relevant. And that brings me to financial services also. I think intermediary financial services is again a challenging business to be in, including broking. I think very few businesses in the world make money at 2-3% market share. In India, most of us till date have been making money. I think that's going to be challenging. So I think certain businesses, it's important also to know which can be well destroyed and where we can be off it. I think the other businesses still seem to be.
Great, there's some good ideas, and I would suggest, if you read that Mark Anderson article on the Bitcoin, he said in the 1970s you have the personal computers, 1990 you have Netscape, 2010 you have the Bitcoin. It's going to be that, and it takes away those 2-3% that MasterCard and whoever makes by making it virtually free to transact money overseas. So, obviously the world doesn't know how to deal with it yet, but probably an opportunity there. Sanjoy, I'll let you have the last word. Share with us your thoughts on this.
So I'm much worse than these two guys because I don't think in sectors.
I know you think in terms of stock, and I can't wait to hear your ideas.
Yeah, so there are enough great stocks. I mean,
And we're talking this bite tight, sit tight type of variety stocks.
You got to sit tight till you have reason not to sit tight. I mean, if you have reason not to sit tight, you've obviously got to protect your own interest. If you see a guy running amok and doing dumb things in terms of allocating capital, you've got to move on.
Other things being equal.
Yeah, so I would say yes. I buy the principle that patience pays a lot. The power of compounding works wonders. But there's no formula that you have to just sit there forever and do nothing. I don't think that works.
Grant that, yeah.
Okay, so, I mean, I think there are lots of places where people don't want to look because they're so unsexy and so mundane. I think one of the places where there'll be big opportunities in India, I'm cooking this up as I go along, but this is how it works. So you have a problem with structural inflation in food. So you got to increase agricultural productivity. So how are you going to increase agricultural productivity given that the political challenges of actually improving agricultural productivity are very difficult to change? That you can't allow contract farming. You can't allow corporates to buy 5,000 acres, put money to work in agriculture, increase the productivity, mechanization, irrigation, all of that, because that's anti-poor, within quotes. So what do you have to do? You still have to improve agricultural productivity. So you got to do a bunch of things there. You got to have lower horsepower tractors. You got to look at things that make sense to the farmer given the size of his fractional land holdings. You got to look at affordable but effective, inputs for the farmer, nutrients, because the soil erosion is so great.
So
He'll tell you this.
Genetic seeds, fertilizer, tractors.
That's advanced. You don't need to even go there. But yeah, I mean, it's got to be cost effective. In the Indian context, you must realize that the Indian farmer, like most of us Indian consumers, is looking for a cost effective but a value seeking proposition. So if you can deliver a more effective herbicide or a more effective plant growth nutrient or something that enriches the soil, because there's massive soil erosion by replanting, by lack of crop
So give
rotation.
us some names that you're looking at.
I mean, I think that's not a good idea. Simply, I'm happy to give you one name and leave it at that. But, I have become very disturbed by, one guy says something and people thoughtlessly do dumb things thereafter. And I'm very against that idea. In this particular instance, I tell you the name. And I got it actually from a guy whom I have the highest regard for, a guy called Kenneth Andrade. It's a company called Kaveri Seeds. It's very interesting because there's so much controversy attached to so many different parts of this business. The owner, the challenge from Monsanto, the cost effectiveness of the proposition, the ability to scale up the business. But I'll give you a simpler one, which I'm happy to name and which has no controversy. The same area, Swaraj Engines. You're supplying to Mahindra & Mahindra, India's largest producer of tractors. There are only 2 people in this country who really make engines in that horsepower range. It's a question of adding capacity, extremely skillful allocator of capital, and
Good dividend payouts.
it's not just that. Incidentally, capital allocation is not just about dividend payouts. It's about how you decide to grow, how you finance growth. So if getting low-cost debt is a possibility, then that's wonderful. You should leverage your balance sheet. So I think that's why. Another company that I'm very impressed by, and I think, again, it's the kind of thing he talks about, 2 companies that I think are fabulous companies, and they've got most things right. Obviously, they're both affected by interest rates, and they have some degree of cyclicality, but terrific ability to capitalize on the future. One is Cummins India, one is Sundaram Finance, and the third one is Supreme Industries. But in all three, I think the important thing is to know that you're buying a high-quality business run by people who understand what they're doing in great depth, who have tremendous clarity, who have tremendous character, and who are very good capital allocators. That's what allows you to sleep well at night. When you own Supreme Industries, you really sleep well at night. Or Sudham Finance. I mean, you can't find people like that easily. And for them, actually, integrity is not about cleaning their potty. It's actually living what they believe to be, a set of values that they hold dear. They're not posers. They're not going out and trying to convince you or X or Y that they're honest. They do it because they believe in it, period. And it's enough for them. Other people like it, great. They don't like it, even better. And the one thing I will say that often poses a problem, and I don't know why there's so much confusion about this. A lack of liquidity in a high-class business run by good people is simply a sign that the vast majority of people haven't figured out what the business is about. If a company delivers consistently good operating results year after year after year, the liquidity will follow like night follows day. In 1994, Infosys used to trade on many days 1,200 shares a day.
Wipro.
Many of these companies.
It was impossible to buy till about 97.
Cipla.
So I mean, I'm often accused of coming up with third-rate illiquid ideas, and to that, I'm wholly guilty. I'm absolutely guilty of that.
Yeah. Well, I'll leave you all with this final thought that time is the friend of the great business and the enemy of the mediocre. So that's in summary what they're all saying is buy a great business, buy at a great price, buy right, sit tight.